Hey, it's Rick Brenkus here, Keller Realty, the Marketplace, doing our podcast, and I've got a special guest with me. I've got DJ Bennett with Guild Mortgage. Now, DJ, why don't you go ahead and introduce yourself? Tell us a little bit about yourself and how long you've been in real estate.
Okay, well, Rick, I'm delighted to be here, and thank you for having me. So I'm Donna Jo Bennett, but I go by DJ because it's so much easier. I've been with Guild Mortgage for 7 years, but I've been lending here in Las Vegas for 20 years. I used to lend on the East Coast before I came here, so yeah, I'm like 25 now, but I've been lending for 20 years. So anyway.
There you go, right? Well, not only are you a world-class lender, which is amazing, but I think you had some exciting events happen with you and your family here in the last week.
I did. So we actually welcomed our eighth grandchild. Again, I'm 25, right?
Yes.
We're sticking to that story. But anyway, but yes, little Miss Adeline was born, and she is the firstborn to my firstborn. So it was a very special time.
Oh, how cool is that? Oh, congratulations.
And she is 1 week old today.
Oh, wow.
So, and I'm going to teach her math because then she can become a loan officer and do real good.
Well, you got to have a transition plan, right? Someone to hand it down to.
That's right. So
fantastic. Well, one of the things that was so exciting, and you and I have been kind of anticipating, knowing this day was coming,
yes.
Waiting for all of the guidelines to get out. A lot of times with programs, you hear about the program, and then you're waiting, and the guidelines are supposed to come, and as always, they're delayed. But Guild Mortgage has a special program, kind of unique to other lenders don't have this program. Is that correct?
It is. It very much is.
Awesome. And what it is it's a 100% financing.
Correct.
Okay, so tell me about that, and what type of loan is this? Is it a conventional loan, an FHA loan? What type of loan is it?
Okay, I'd be happy to answer that. So it's an FHA loan, and it can only be used on FHA financing, not the conventional, and not VA or USDA. The nice thing about the FHA loans is that they're a little bit more forgiving than conventional is as well on debt ratios, because like we can go up to a 50%. So it's advantageous with that, but it's an FHA, so
so the qualifying is a little less strict.
A little bit, yeah.
Okay, so we're gonna come back and talk about ratios, just because we want to make sure that everybody's understanding.
Yes.
DJ and I sometimes have our little code words and our lingo that we have in real estate, but we'll go ahead and break everything down. So FHA, so it's an FHA loan, which is super exciting. You guys are the only ones that have this program. The qualifications are a little bit less strict. Tell me about this. So 100% financing, does that mean there's one loan that's 100%? Is there a typical FHA? When you say it's an FHA loan, I know they have their guidelines as far as down payment. How does that work?
That's a great question. And what it's going to be is the standard FHA loan at the 96.5% loan to value. So generally, if they're going to take an FHA loan and they're buying a home for $200,000, they have to put 3.5% down. So the 3.5% would be $7,000. Their loan amount would be $193,000. In this case, Guild is going to do a second loan behind the first, and we're going to do the loan for the $7,000. And so then that way they don't have to have any money for the down payment.
Okay. Oh wow, that's fantastic. Okay, so tell me about that second. It's a second. And do they have to make payments on the second? Is there a way that can be forgiven if they make a certain amount of payments? How does that work?
That's great too, because there's two options. They can do one where we amortize it over 10 years and they make payments for the 120 payments.
Okay, so option number one would be that second loan is amortized over 10 years. The beautiful part about that is they don't have to come up with that down payment up front.
Right.
So that's still beneficial. And you and I were talking before, you don't think that's the best of the options.
No, I don't, because I love door number two.
Okay, so tell me about what's behind door number two.
Door number two is a loan that is silent. It sits on title as a lien against the house, but there's no interest. And after you've made 36 mortgage payments on time, it's completely forgiven, so you don't have to make any payments.
Whoa, I like that. No interest, completely forgiven. You've got my attention. So, okay, I heard you say 36 months and it's forgiven.
36 of on-time payments.
36 on-time payments, not 36 months. Okay, so let's dive into this a little bit more. Let's say I make 12 payments, on-time payments.
Okay.
Okay, I'm no payment on the second, I'm just making the payment on the first. Do I have
Correct.
it? Okay,
Correct.
excellent. Then something happens. With job, bills, medical, car, who knows, life happens, right?
Right.
And all of a sudden I'm a little bit late on my next 2 payments. What happens then? Is there a makeup period? How can I go back and make another 12 or 24 in a row or 36 in a row and still get in good graces of getting this completely forgiven?
Well, that's also a really great question. And what it is that it depends on how late. So we will consider a late payment to be late if it's not made before the first of the following month. So if it was due on February 1st and you went into February because you just needed that extra paycheck or 2 in February, as long as it's made and received before March 1st. So I tell everybody, you know what, go by the 25th. Make sure it's there by the 25th.
Sure.
Then it's still considered on time. If you go into March, then all the months that you've paid don't count anymore. You start, but it's nice because
sounds fair to me. I mean, you've got sitting across the table from people, as long as they understand the rules, and there's a makeup.
Yeah.
Which is just amazing to me. Normally, hey, these are the rules, and if you step out of these very strict rules, there's no makeup.
Right.
But this one, what I'm hearing is, if something happened, and even if you were 15 or 18 days late for this program, you're not considered late.
Right.
So that's outstanding.
It's very rare to find anything in life that gives us a do-over.
Yeah.
And you get the do-over from it, and so then you start in 36 on-time payments, and then it'll still be forgiven.
Outstanding. Now that's exciting.
Yeah.
So answer this for me. Okay, so I buy a house as FHA. Could it be an investment property? I think we already know the answer to that, but go ahead and explain.
No, you must move into the house within 60 days of finishing the purchase, and you must occupy it as your primary residence. Primary residence is where you're going to go home every night after work, where you're going to get your bills sent to, all your mail, where you're going to have your Christmas tree or your Thanksgiving turkey or whatever. That's a primary residence. It can't be a second home. It cannot be an investment property, and you can't just say, oh, okay, well, I'm going to go buy another one. I'll just kind of leave this sit here.
Sure. So FHA, that they have a little less strict qualifications, and it's for the owner occupant. So
right.
A primary residence. So fantastic. So it's my primary residence. Now let's say that I sell this before I reach those 36 on-time payments. Is that allowed? Could I sell it?
You can sell it. You can rent it. Let's say, unfortunately, life happens. Let's say you get a job transfer and you have to leave the area, but you're maybe not quite ready to sell this yet. Well, it doesn't matter. If you transfer it, rent it, or sell it, transfer it, rent it, or refinance it before the 36 months, then the balance that has not yet been forgiven on a prorated basis, that then has to be paid at closing. So, if you sell it, you're going to want to make a profit on it, and if you're going to rent it out, you're going to want to make sure you've got that money to pay that. So,
sure. Well, so it sounds like when you use this specific program, there's some huge benefits. No down payment, which is pretty awesome.
Right.
I want to pre-plan that I'm going to be owner-occupied in this property for 36 months. And I want to make all my payments on time. After that, it sounds like I'm pretty free to do whatever I want. I could sell it after the 36 months.
Yes.
And that 3.5% that I got is now forgiven. Am I understanding that correct?
And then you've got your equity that's built up over the 3 years.
Oh, yeah.
And so then they can come back to you and go buy the next house, maybe the bigger one with a pool or what have you, or the smaller one.
So many times that's exactly what we see. We see people using the FHA programs a little less strict on the qualification. They're using it as a stair-stepping home. They want to buy this house. Maybe it's something that is not their dream home, but something that they can fix up, build some equity over a period of time, maybe put some landscaping in, some carpeting, get it the way that they like it, and hopefully as real estate values go, we've got some appreciation, we've got some mortgage balance being paid down. Now they have a nice little nest egg to roll over to the next house. So
Agreed. And so it's a perfect home for that. And sometimes they've had some stumbling blocks that happened. and it put them into a negative position, but they want to buy instead of paying the rents because we know how the rents are going up. Well, the FHA is more open to those opportunities for them as well. So.
Sure, no, fantastic. So many times when you hear these 100% down loans, they have such a small window that somebody could fit in that would qualify for this.
Right.
Are there income limitations for this type of loan?
Yes, there are. And basically it's 115% of the area median income.
Okay.
So
do we know what the area median
we
is?
do. It's imagine that.
Imagine that. We've got DJ here, and she has all the answers.
There you
of
go.
course she does.
Anyway, it's about 68,000 right in there. But the area, so the 115% would be that the income cannot exceed 78,000.
Okay.
There's a few $100s over the 77,000, but I worry about the nickels and the dimes.
There you go. So somebody has that income. Is there a FICO score that they need to fit within parameters?
There is. Now we pull from Equifax, TransUnion, and Experian. We pull actual FICO scores. A lot of people say, well, my Credit Karma score, but that's a Vantage score. It's not a FICO score. But the FICO score, we use the middle of those three, and the middle of those three has to be 640 or higher.
Oh, wow. So
Yeah.
Pretty aggressive on your part for lending, that it's not somebody that has to have a 800 FICO score or 750. A 640 is
Right.
a reasonable person that has good credit, but not flawless, impeccable credit.
Right. They maybe have had some struggles along the way, or maybe they're just younger and they just have not really established too much credit
And
yet.
that's part of the credit score too, is
Right.
longevity on having credit
Right.
cards or establishing credit. So younger people that maybe don't have that longevity, their credit score couldn't be as high as somebody that makes the same on-time payments but just has done it for a longer period of time.
Right.
Makes sense. Well, fantastic. Oh, one of the things that I said we were going to circle back to was the debt ratios.
Right.
Okay, so just want to kind of talk about that. When you say debt ratio, what is a debt ratio?
A debt ratio is when I take the debts that they're paying on the credit report, such as student loans, credit cards, the minimum payments, not what they actually send in every month, but the student loans, the car payments, the credit cards. If they have alimony or child support, I have to add that, payments that they have to make, I put that in there. And then I add in the house payment. Now I've got all of those debts, but it does not include utilities and insurances and stuff. So that's nice because that's not in there. I take all of those together and then I divide it into their gross income, not the take-home pay. The
Wonderful.
gross, yeah.
Right, because their paycheck may be a certain amount every 2
Right.
weeks, but their gross, obviously, we have to pay that rich uncle that we have, Uncle Sam,
Yes.
right?
Right.
A portion of those. So it's the gross income, gross monthly income, and then these.
Right, and so
other
I take
payments.
that total and I divide it into the gross monthly income. And depending upon how the computer's reading it, they might be able to go up to 50%
My
of their
goodness.
gross income for that stuff. Generally, the cutoff is around 43 to 45%, so
Wow.
there's more forgiveness there. So they've got the forgiveness on the credit score, they've got that on the debt ratio, and then they have it on derogatory events too, which we haven't talked about yet, but we'll get to that.
Sure. Well, and you know what? That is a great segue. See how we are like hand in glove here. So if somebody has some derogatory credit, they have, I don't know, a Sears bill that fell behind their dresser. I don't even know if Sears is around anymore, but we used to always have somebody that had a Sears bill from 5 years ago, or somewhere along the way that there was an argument on a collection for a medical that
Right.
a service that they're saying, well, I never received treatment from that person, I'm not paying it. So now all of a sudden you have this derogatory on there. Talk to me about that. Or do you have a cure? Is there a way to work around some of those things?
Some of that is, it depends on the grand total of the derogatory items, and when it depends on whether it's medical or not, because there's a lot more forgiveness when it's medical, because it's not like, hey, I decided to go break my leg today because I thought that'd be a good time,
Yeah.
And so it's something, it's not like you chose to go and shop and get a little overextended. It's something that happens, so we're a lot more forgiving on that. The biggest things that it's the most forgiving on, though, is bankruptcies short sales and foreclosures.
Wow.
So if somebody just, their world, they were going on their little life's journey and all of a sudden it was like, nope, we're gonna put a roadblock up and you're going this way. And let's say they lost a home. Well, after 3 years with a foreclosure, you can get an FHA loan. You have to wait 7 years to get a loan when it's a conventional loan. If it's a short sale, it's only 3 years, and if it is a, 3 years. Yeah, and then bankruptcy is 2 years. So there's a lot more forgiveness on the major derogatories. And then the collections.
Sounds like there is a remedy time period in there.
Mm-hmm.
And should we make DJ do it backwards on all of those and see if she can do short sale bankruptcy in a different order? No, we won't do that. But she is amazing, and she's doing all of this. You see, I have notes in front of me. You see, she has none. So she is amazing. I just want to thank you so much for bringing this our attention. We've been waiting to try to schedule this, knowing that this is coming. And is there a limited amount of time or funds that are going to be available with this, or is this look like it's going to be here for a period of time?
That's a really great question, and I have no idea. But I'm just like, you make hay while the sun shines. The sun is shining right now.
Right, great point.
One thing that I wanted to mention real quickly is income tax returns are coming up.
Sure.
Income tax refunds. They will need some money to close. And of course, they need to put their earnest money down.
Sure.
So with the funds for their closing costs, not for the down payment, for the closing costs, they might be able to get that through their income tax return, or they can get it as a gift, or they could talk to a top negotiator, such as yourself,
Sure.
who could maybe get a seller contribution towards closing costs.
And we do that all the time. We write an offer, purchase price, we're getting the down payment through Guild's program, and then there still are some other closing costs. We could actually ask the seller to help contribute for that. So you actually possibly could buy a house with little or actually no money down. So if you want to find more out about some of these programs, right now, I mean, interest rates are still hovering around a 40, 50-year low. It is a wonderful time to buy.
Mm-hmm.
The sun is shining. I love that saying. Right now is a great opportunity. If you're thinking about doing this, if you have questions, please reach out to us. Rick Brenkus and the Brenkus team here at Keller Williams Realty. Phone number somewhere in the background there, kind of a subliminal message, but 702-456-5959. We look forward to helping you out with any of your real estate questions. DJ, thanks so much.
Thank you. And thank you for having me.
Thanks.